Welcome to my channel if you're new. In my last video I talked about principal and interest. Now we're going to tie it all in together with taxes and insurance. If you're new to my channel, I encourage you to subscribe and drop a like if you find the content helpful. But most importantly, as I always say, let's learn. Now let's tackle taxes and insurance. So to tackle taxes and insurance, first we must understand how they are affected by. So for taxes, many things can affect it, but the most popular things are going to be the size of your home, the construction of your home, the age of the home, and most importantly, the location. There are going to be other things that tag into affect it, such as the school district in your area, other municipalities that have to be paid for as well. Now, there are ways to lower your taxes, such as being a veteran or if you're a senior member. You could even do certain things like this. If you buy a house that's move-in ready, your taxes have a better chance of remaining the same versus buying a house that's a fixer-upper. Because once you get work and it's permitted and basically documented work, they're going to see the changes that are made to your home. Due to so, that's going to increase the property value of your home and therefore raising your taxes. So, a house that's move-in ready versus a fixer-upper will start off with lower taxes. However, it can just gradually increase and surpass a move-in ready house. Now, for home insurance, let's talk about what that covers. It's going to cover four things. There's dwelling, personal property, liability, which is one of the reasons people always talk about they have to go put salt down in the snow, and they also have other structures. Other structures basically mean stuff like your garage when it's detached, or if you have a shed, or just other structures that are outside of your home. Alright, now for my example, I'm going to use three set numbers. The most important set number that I'm going to use is a payment of $3,000 a month. The reason why I always focus on monthly payment is because that's what it truly comes down to at the end of the day. You're not paying the bank $500,000. You're paying them a down payment, and basically, therefore, after that, you have an agreement. Your agreement says that you're going to pay this certain amount. And for this example, that certain amount that you're going to pay every month that you believe you could afford is going to be $3,000. Now, your interest rate, we're going to lock that in at 2.75. And your down payment for each example is going to be $60,000. Now, we're going to use four counties. The four counties are going to be Queens, Nassau, Suffolk, and Westchester County. So let me talk about the taxes. The taxes that I'm going to use are going to be the average for each county. Like I just said, average. So please understand that this is not affect you directly, or it doesn't mean that they're not real. All this stuff is Googleable, but just realize that the Googleable word, but all this stuff is searchable basically. And these are averages. Now, many reasons your taxes could be high for many other reasons, such as your school districts and you have a pool and other factors. But please remember that these are averages. So, as I continue, Queens, the average is going to be $5,000. In Nassau County, the average is going to be $14,000. In Suffolk County, the average is going to be $9,500. And in Westchester County, the average is going to be $9,000. Now what you have to do after that is figure out what your monthly payment is going to be. You do that by dividing each number by 12. So when you divide each number by 12, say 5,000 for Queens, you're going to get a rate of $417. Then for Nassau County, you're going to get $1,167. For Suffolk County, you're going to get $792. And for Westchester County, you're going to get $750. So now to add on home insurance. So for home insurance, what I did is I just got the average for the whole state to make it easier for this whole equation. So we're going to use a rate of $1,300. Now keep in mind, like I said, this is average once again. So please don't say these numbers don't exist. This is average for the state. Now, one thing I want to point out is if you have to get flood insurance, that's totally separate. Flood insurance and home insurance, they do correlate. However, that's something additional that you have to get. Home insurance will cover something, say, as if a pipe bursts in your home and now you have water damage due to so. That's what home insurance covers. However, if you have a flood or damage due to a rise of a body of water, that's something that you need flood insurance for, and that's totally separate. Now that totally separate amount is also going to take away from your buying power, and you can add that into your escrow, which is going to be with your principal, insurance, taxes, and interest. So now as I continue, once everything is combined in, we have the averages of what you're going to be able to afford and now your buying power. So now in Queens, your buying power goes to $510,000 nearly. In Nassau County, your buying power goes to $406,000. And in Suffolk County, your buying power goes to $483,000. In Westchester County, your buying power goes to $492,000. Now, please remember that once again, your interest rate, your down payment, and your monthly payment is all locked in. So you're still going to be paying the same amount no matter where you do live. However, your purchase power is lower in certain areas due to the taxes. And one thing you have to remember, taxes are only going to go up. So please know what you can afford. Or if you have a salary that is steadily increasing, that's going to help you keep paying for that rise in taxes. Because Uncle Sam has to get his money, and you don't want to have a lien put on your house due to not paying your taxes. That's why one thing that's always recommended is to get escrow. What escrow does is they pay all the four essentials that I was talking about: principal, interest, taxes, and insurance, combined all together. Therefore, it's something that you don't have to stay on top of as much, and it's especially very important for first-time home buyers because that's something that they might not know of, and you don't want to get yourself in trouble because you faulted on one of your payments. So I hope this video helped you understand a little bit better about taxes and insurance and how basically your location can affect basically your buying power. But if that's where you want to move, you take it with a grain of salt and you make that move. So, like always, subscribe to this if this was helpful, or give me a like. Always feel free to contact me. My information is below, and thank you guys for tuning in.